good evening to all of our speakers and audience. So basically, we are also making this live stream, so we have reached some of the audience as well. So let me start. So basically, today's roundtable topic is utilizing AI for optimizing the investment and portfolio and predicting the market trends. So that's actually today's topic, and myself, Sabir. Just give me a second. Okay. Well, so it's live recording happening. Okay. So I will start about myself. So myself, Sabir Sachi. And I'm CEO and co-founder of Techno Exponent. I'm excited to lead today's discussion on this cutting edge topic. And I will start about myself and then, topic and then, introducing all of the energetic speakers. Thanks for coming and joining to us. And then this will be followed by the interactive question answer sessions. So I already talked like myself, Sabir Sachi, CEO and co-founder of Techno Exponent. Techno Exponents have 400 plus in-house engineers. We are a development hub currently doing, AI, machine learning, then blockchain, then all kind of technologies we are working with, web development, mobile app development, and everything. And I'm doing my PhD in Chain AI from SSBM Geneva, and my topic is sentiment analysis. Now, let me a little bit talk about today's topic, and then I will go each of you to discuss more about it. So today's topic is very simple word. If I talk, then how artificial intelligence or AI is being used to make the smarter decision on the investment, because everyone needs to invest the money, but how that AI actually helping, how AI actually helping to make the smarter investment decisions. And then, if there is a mixed investment, like, to invest into the stocks and bonds, or, like a combined things, and then like get the best return with can you please mute? Sorry. Get the best return, like, for minimizing the risk. So that is actually our goal point of this discussion, and some real life situation where we can get like if some real situation is happening or not, and then like predict the market trends and helping investors when to buy and sell. So that I wanted to talk in details with you and see that how it works. So I gone through many of your profiles and I research about them. So I will start with Carla Gracia. So I found that your thing is very interesting. So if you start with the topic and if you want to talk about it.
Do you guys hear me well?
Yeah, we can hear you.
Yeah.
There's a lot of noise in the background. Sorry if you guys don't hear me well. But anyway, thank you very much for the invitation.
I think Anush might be maybe muting Anush.
Yeah, Anuj, if you mute yourself, I make him mute, yes. Okay, we can go ahead now.
Oh, fantastic. Well, thank you, everyone. And thank you for having me here today. I'm Carla, and I'm the founder of My Plan Keeper AI. And I've spent 20 years working as a financial advisor in the industry. And I've dived deep into the world of AI, advanced technologies and tools. And at the end of the day, we are in the cusp of a very profound change in how we deal our relationships with computers. And this includes the financial sector. Now, this technology is transforming how we live, how we work, and how we experience life. So in my case, investing, it's about improving our lives. And that AI-driven innovation, it just opens so many opportunities. And what we do, we use data science, machine learning, emotion recognition to really provide a gap. We're bridging the gap between consumers, the human side, and the advisors, and really leveraging to, at the end of the day, when we think of portfolio optimization, investment, we want higher returns and we want to reduce the risk. And I am in the world of emotion, sentiment analysis. And it's very exciting what is happening because the era that we're in, it's intelligence. And there's a lot of intelligence being infused into the industry.
Yeah, so that's absolutely, Tyler. So I just wanted to know, like, what real life examples, or you already built the platform for retirement and everything. So what real life examples you are thinking? Like, are they are predicting? Is there human intervene needed, or like AI is doing all the things? You are using the old data sets and things like that. If you a little bit explore on that specific part.
Absolutely. So there's several use cases that we're using right now, especially advisors, portfolio managers, and that's augmenting them. It's human advisors who use AI tools can enhance their capabilities, can connect better with their actual consumers, right? Because the tools can process very large amounts of data. They can identify patterns. It can provide insights. And there's insights and things that is very difficult for a human to achieve. So a lot of the benefits that we see when we talk about augmenting, for example, human advisors, how we can provide hyper-personalized recommendations. It's looking at that data analysis, be more efficient, be more personalized, tailoring that advice by considering that individual financial situation, by analyzing sentiment, which is very powerful because it gives us that positive, negative, neutral of how the market is reacting. But now more than ever, we have that real-time insight. We can take historical data along with real-time conversations. So it's very important that when we look at augmenting an advisor, it's how can that advisor understand our client behavior better? How can the trust be built better? Because at the end of the day, what we want is we want the consumers to buy into these portfolios, feel good about the portfolios, and for the advisors to make better recommendations. So managing stress, financial decisions are very, very stressful, and they actually can really take those leading indicators and provide more accurate prediction for portfolio managers, for example. So when it comes to retirement, there's right now 70% of adults in the US, 63% in the United Kingdom, in Germany is 57%, in Switzerland 55%, and France 48% have reported financial stress. And adults, for example, Australia, Germany, I mean, the retirement crisis, it's very large. And in the retirement planning sector, we must consider the emotional and financial aspects of the clients. And that's what advanced AI tools can help us analyze that. Past behaviors, the emotions, the preferences. And for example, traditional risk assessment, they don't work anymore. So now these tools, that's another use case, can help us capture the bigger picture, the full picture, assess the behavioral part of it. Before, right? Before the risk assessment will maybe focus on accumulation, and now we can really target the time where they need to start thinking about deaccumulation. And so, yeah, I provide more insights into the data in real time.
Yes, thanks for your insightful thoughts. And I also, will be giving my inputs on different sector which we are working. But I like to go to Andrew. Andrew directly, involved with the investment market, as per I seen you on LinkedIn, Andrew. So, and you say you've made a lot of posts on that. So if you a little bit give the insight of it, and how do you make a data-driven decision making? Because I've seen a lot of time you put that particular things in your LinkedIn. So if you little bit give a thought on that how investors and how AI scientists should, think about in the future on that particular domain.
Hi there. Yeah, thank you for having me. Very good question. A lot of the work that we think about, obviously, there's many different applications for artificial intelligence and its ability to construct patterns and optimization. Our USP and focus really is in the fundamental understanding of investment opportunities, utilizing the benefits of large data sets and mostly the lack of bias, but alongside the sort of speed and the time component to be able to look at lots of different investment opportunities at the same time, under the same conditions, and being able to compare them entirely in an unbiased way. So to be able to make an assessment around what you think the performance is going to be at the next earnings, what does that mean, 1 year, 2 year, 3 years out, in as sensible way as you can be. We're not looking, we don't have a crystal ball. We don't know exactly what's going to happen, but if we can make as informed a decision as possible. So we're already seeing benefits in the improved accuracy with respect to what does the actual earnings performance of an investment look like. And naturally from that outperformance, there's a lot of benefits when it comes to identifying the best opportunities, constructing the portfolio on that basis. Once you have that increased knowledge, there's obviously a variety of different applications for that in how you make investment decisions. And obviously that doesn't just mean in sort of public equity markets, but also across the private investment space that is obviously naturally very fundamentally driven rather than necessarily perhaps more sort of price, momentum, expected return driven. So that's really where we're focusing, which is, I guess, a little bit different to some of the earliest users of AI in the investment space.
Well, so how do you feel like, is it like really impacting to the, like a normal investor's life? Like, they are getting, I understand like it's a bigger stocks and those things are really helping, but day-to-day life or, investing in day-to-day life, because I have talked with US people, Indian and UK. So sometimes they work with day-to-day stocks. So basically like, they buy and sell in intraday kind of a stock. They buy and sell every day, and they try to get profits and they try to earn. I'm not talking about the long-term investment, but a short-term investment. So do you think that this short-term investment is really impacting, can be impacted through AI? Like, can it be worked as an expert advisor?
Oh, for sure. There's definitely a significant element of that. I mean, naturally, elements of AI and machine learning is advancements within the optimization of high frequency models and anything sort of akin to that ability to calculate large amounts of mathematical problems in very short period of times and with broader inputs that allow you to sort of update within shorter periods and obviously with increased accuracy. Very much there's an element that I would say in the where we can see increased signal strength, perhaps is actually in a little bit more of the medium term than in very short frequency, because at such short time periods, the drivers change very significantly from one period to the other. And so the ability actually for an AI model to be superior to an existing expert advisor type trading strategy is less significant, whereas actually the benefits of utilizing an AI infrastructure without those traditionally sort of human failures in the trading sphere between sort of bias and emotional response allow you to play out slightly better when you move that horizon to a slightly longer term from an intraday interaction. Okay,
understood. So I believe this is certainly a thought. So I will be going to the Gilles. So Gilles, congrats for your most influential shoe awards. It's very nice. A few days back, I received like most influential young leaders were behind me. Well, so I feel like I feel like you're a finance AI expert.
Thank you. It was in data science in Scotland rather than AI, but of course both fields are connected. So just a little bit about myself. I'm the founder and CEO of See the Next Move. We are a startup based in the UK. What we do is we essentially work with corporate, typically CFO, to help drive digital finance transformation in a different way, particularly by focusing on AI and domain-specific AI. So the investment domain for us is just one of the domains that you would tackle within a digital finance transformation. And of course, there are two angles to this. There is the angle of optimizing portfolio risk and return, probably mostly in the midterm, right? And then there is the other angle, which we've touched on, which is more aligned to trading, which is all about exploiting market volatility in an ethical manner. We've just done a study looking at, essentially what CFOs are doing in this domain, right? Because they are a good gauge of what's real and what's not. And what we found was that, so excluding the banks, right? So broadly speaking, you've got about 68% are learning, right, about applying AI to investment, portfolio management and capital planning. You've got about a bit more than 21% that are experimenting, 10% are actually trying to prove the value of this, right? And what we're seeing is that really the value of AI that's emerging is really in supporting some of the best practices in investment strategies. So supporting obviously data integration and quality management, model development and back testing, which obviously is important, particularly when you look at the shorter term trading and of course risk management and diversification. So I mean, I could expand on any of these. I just don't want to kind of use too much of the time, but essentially what we're seeing is that, so over and above the point that was already made about the use of expert advisors that do not rely on AI, I think the additional element that AI brings is in the ability to reason across not just large data set, but essentially scenarios that would otherwise have to have been pre-programmed, right? Essentially make a practical example to your point around short-term trading, that would be about reasoning about a scenario which considers essentially across multiple time frame various algorithm and indicators and their relationship to price, volume, and control points. So very complex, multi-dimensional thinking, which would take a trader in this case too long, right, to be able to react. And of course, on the more traditional midterm risk management and portfolio aspect, it's about reasoning on both qualitative, quantitative information and extrapolating, the lessons learned from a different blend of fund. I think to your point, you introduced, I think, the session about, and maximizing return across different asset class, right? I'm paraphrasing, across, let's say, bonds, stocks, shares, maybe different investment vehicles. Mm-hmm. Now, all of these have their own way of being valued, their own risk profile, forecasting, their value, frankly, is difficult and essentially typically a non-linear things, right? So there are phases of market that are more likely to be reliably forecastable and those that aren't. So AI essentially sort of had this layer of reasoning, and of course, now with generative AI, we can also blend that kind of back end, if you will, with expert advisors and using cool things like retrieval augmented generation to enrich large data models that are themselves trained on particular application of investment analysis. I mean, there are really no technical limits right now. The limits are more in terms of establishing what the real ambition is and the limitation in regulated industries, right? I hope that makes sense.
Yes.
You want to expand me on anything in particular?
Yeah. So what are I was coming to that particular thing. So basically the mixed, and you already mentioned it's a complex algorithm, and Gen AI or predictive analysis, those kind of models are really helping to the market trends. So what do you think is like a biggest challenge could be faced on that particular when AI is using for investing? Do you any sort of thought on the biggest challenges which should be faced on this investment industry using AI?
So yes, I mean, so from an adoption standpoint, there is a huge hurdle in kind of education and particularly understanding the net incremental value of AI over and above, let's say, data science, right? Mm-hmm. At a deeper level, there are, I think, ethical considerations, right? So already, the ability to combine, let's say, just high volume trading with AI in some context is frankly not necessarily very ethical. It's disallowed in some cases, and then you've got essentially the limit in terms of relating AI to the risk profile that is, let's say, a CFO is prepared to engage with, right? So it's obviously less about individual personal investment than it is about investment and capital planning and capital management in a corporate. But it is, the more complexity we introduce in investment management, the more challenging it is to develop a proper appreciation of risk, and to demonstrate that the risk profile of what's that we are essentially adopting, right, is on a par with what's acceptable, and that is a problem.
Yeah, absolutely understand. Hi, Chad, you joined a bit of late, but we are discussing on the topic on, right now we are into the investment domain, like how AI is helping. So I will thanks Gail for your insightful thoughts. So I will go to Michael now. So Michael, you are having a top voice in LinkedIn. So if you have any particular thought on this specific topic, or if you want to explore, or if you have explored something on AI on this investment, and if you want to share with the team.
So first and foremost, thank you for having us on here. It's great to be amongst such esteemed panelists and having a.
Michael, your voice is coming a little lower. If you bit louder.
Yeah. Right. Can you hear me?
Yes. Yes.
Yeah. So I wouldn't be able to opine on the specific technical aspects that our CTO has mastered in artificial intelligence. So with respect to the EU AI Act, it covers a range of use cases across all industries. So if you're using artificial intelligence for investment decision-making processes, then that will be within scope of the regulation. And this is where the EU AI Act comes into play. So you have 4 risk levels: unacceptable, high, minimal, and limited. And the extent to which the risk level of every single AI system, AI model, or algorithm depends on the risk to an individual's health, safety, and fundamental rights. So 2 potential or hypothetical use cases that you could say is 1, biometrics. So if a fund manager is using Bloomberg Terminal and they're using a biometric way of accessing the panel, or sorry, their terminal, then that would be within scope of the EU AI Act, to the extent there's an AI system involved. Secondly, for example, if there is a AI system used for transaction monitoring purposes, and I know that the FCA are actually consulting on this in one of their latest consultation papers, actually putting the use of AI and putting in their handbook of guidance of rules for people to abide by, are 2 indicative or 2 examples of how AI is now being embedded within services. Within a broader context, the EU AI Act incorporates it does provide certain exemptions for financial institutions because they're seen to have the most robust governance rules and requirements they have to adhere to. For example, CRD4, Basel III, and I suspect a lot of other things as well. It also ties into some forthcoming regulations coming forth this year. So without delving too much into detail on the specific investment aspects, and because I believe other panelists here are probably better qualified in that sense, from a regulatory aspect or perspective, the EU AI Act puts every single AI use case under the scope, and the extent to which the obligations apply depend on the level. Does that answer your question?
Okay. Yeah. So one more follow-up things with that. So basically, what the future trends you are seeing currently, like on this investment domain, like any kind of future trends you are in next few years, what is shaping like in your thought?
I'm not at liberty to disclose anything that would constitute financial advice or anything like that. What I can say is the generative AI space is evolving, so you're seeing a lot of iterations on existing models. So you see the first wave of applications hit the market, and now there's being some form of consolidation there and improvements, and now the next wave is probably coming, and you're seeing various iterations there. So I'd say probably, for example, a lot of the big investment managers, people like BlackRock, people like Schroders, I believe they've built their own large language models, and I suspect they're going to want to enhance those capabilities, build more features, enhance the UX, the UI, all that stuff. So I suspect people are probably just going to sort of retrench a bit, build, consolidate on their existing portfolios, see where the gaps are, and then take the decision from there. It would be very difficult to say exactly, where they're going to go and why. And obviously, you could do research studies and stuff to gain that information. But what I would say is the regulation of the EUA Act, when it comes into force on 1st of August this year, is going to really enforce or drive that next wave of innovation in this market.
Absolutely. Thanks for your thought. I will reach to Paolo. So, Paolo, are you there? I think you're on mute.
Hello, Carla.
I am here.
Yeah, hi. So basically, you are AI and machine learning, researchers. So I really like to know more deeper about what you feel about this particular domain, and it's mostly attached with the investment.
Thank you very much. Appreciate, and thank you everybody for the participation. So just as introduction, I am an engineer, data scientist, and I'm a researcher, right? As a researcher, I publish a good number of articles and books related to my research, and dedicated, I would say 75% to machine learning AI today. So for investments, so imagine that I'm the guy that is thinking of what's coming tomorrow or the next day, right? Because today we talk a lot about generative AI. So we're talking about creating, building, managing portfolios for different, profiles of investors, for small, large, high volume, all those things that are at our reach today. But we need to think of artificial intelligence not as a specific technology, possibly more like an entity, because it's not one thing that makes artificial intelligence. It's together software, processing, high volumes of data, etc. So we need to imagine the moment where we can use the whatever solution we have to consider what happens outside of the statistics of the data world. For example, macroeconomics, where the next time the next country, Russia, that is going to invade and when, right? The next tsunami that is going to happen, next volcano that is going to erupt, etc. All those things, I don't know, hundreds, dozens of hundred things that might influence the market going up and down, elections in different countries, etc., etc. That's the challenge/opportunity that we have with artificial intelligence, like more or less what I'm doing with pacemakers, heart, implantable pacemakers is different. What I'm trying to build for the next generation of pacemakers and what we can do now. Today we can, monitor, make analysis, etc. Tomorrow we'll be able to, be real-time monitor, but also in constant contact with the group of experts that are, being the last resort in terms of diagnosis, or even providing some level of diagnosis of what's going on to the person that is having a crisis right now. So with AI, I think is today what we have off the shelf is good. Like it's going to make more effective the job we have with our portfolio manager, right? With our group manager of investors, our club of angel investors, etc. For sure, that's good. But it's I think we're still a little bit far from having real AI, not generative AI. So AI that's really taking decision for us you know, we have our portfolio. It still depends a lot on what we do, right? If we react to the portfolio. So what's the AI doing? Are they feeding back our portfolio manager so that the portfolio manager can go and move our money around, or are us that are moving money around, et cetera, et cetera. So that's a lot of human interaction still, right? So the idea is to say, hey guys, so the macroeconomic scenario is like this, and that. And in, I don't know, 11 months, something like this is going to happen, and go to this segment, go to the, I don't know, oil extractors and invest on this, and that company, et cetera, et cetera. So that's the thing that in my thinking, that is in my reach in terms of researching, and it needs to come to, I think, closer to people that are working with this to understand, how we can add the real intelligence behind the relationship of AI with investments portfolios.
And if,
Yeah.
can
Does
I
that
add
answer
something
your
Yeah,
to?
sure. Yeah, please.
You mentioned the human element. There was a book, an AI transformation by Andrew. His last name is very short, but it's saying that AI is a new electricity, and just like electricity transformed every major industry 100 years ago, AI is transforming every major industry. But today, and in the industry ourselves, we're in a very regulatory in the compliance part of it, it's a big challenge. So when we look at future outlooks and we look at how can what's going to happen in the industry moving forward, the trends, how can AI integrate with other emerging technologies like blockchain, quantum computing, hyper personalized financial advice, AI driven and sustainable investing, we can actually have investors be very aligned to their portfolios and the needs. But we're moving from manual processes to automated processes, and it's going to do a lot of great things in the industry. But like he said, staying ahead, it's no longer about crunching numbers and about looking at historical data and predicting. It's a lot about human interaction. It's about building effective algorithms that are going to integrate the emotional part of it in portfolio management besides the data. But a challenge in the industry itself, we're going to see challenges with data privacy, ethical use, accuracy, biases. But one of the significant challenges facing right now the industry is the complexity of integrating generative AI with customer-facing applications. Because despite the widespread use of it, the adoption in our industry, it's going to be slower due to the concerns over data privacy and regulatory compliance. For instance, making sure that AI models can actually transparently explain to a consumer via a conversational bot or an AI tool how they came up with a credit limit, and not have hallucinations on that specific consumer. To address this, we can leverage a lot of things like emotional recognition, analyze clients' facing expressions to understand them better. And we're at a time that human oversight in the industry, leadership and AI literacy, it's a key trend that I see, that leaders have to step up and have to go beyond adopting AI for productivity.
Yeah, that's great points. When you're talking about yesterday, today, and tomorrow, right? So I'm not fan of the analogy with the electricity, but anyway, it's valid. And you mentioned a huge number of disciplines. Perfectly brought to the table everything that needs to be considered, everything that is going to be challenged with the higher adoption of AI with time. But today, generative AI, actually for a while, help desk support, call centers, all these people are using different levels of generative AI for some time. Now they're more sophisticated. Internal help desk and internal operations management software as well. They use a good amount of generative AI. But the thing is, for sure, I'm not putting aside, government, safety, security, privacy, etc., etc. But between today and tomorrow, there is no choice, I think, right? So people that are behind different efforts with artificial intelligence is not going to be different in the financial market. Most likely, yes, in terms of markets like the US, European Union, they're going to have a very good firewall preventing things that you mentioned. But imagine whatever other places that are advancing in research. You mentioned quantum computing and AI, specifically China. They are very, very advanced on exploring and exploiting the goods of AI and quantum computing.
Yeah.
I'm sure they
It will take a
not,
while for the rest of the world.
Yeah, but the thing is, they will not. They're not concerned with our concerns in terms of safety, etc. They will do it. They will make it. They will try to remove the more they can the human thought or the human interaction to take this type of decisions, right? So they want to see what is happening in the world. They want to train their models to predict based on macroeconomy, not only to predict based on macroeconomy, to predict macroeconomy itself, right? So if you take a look, give a last example, otherwise I'm going to talk a lot. So let's take a look. I mentioned Russia invading Ukraine. If you take a look in the pattern of Russian war behavior, invasions, whatever you call, since World War I, right? You're going to take a look what happens with Russia in the 20s, then I think in the 50s, then the Korean War.
Sorry to interrupt you. We are drifting the topic, so I want to take. Sorry to interrupt you. Some questions I got from our viewers.
Give me 1 second to finish this. To finish this.
Mm-hmm.
So you're gonna see that the oil price goes up.
Correct.
Russia is benefited by the oil price going up. They take these radical measures for whatever reason, imperialism, whatever, invading these countries. Exactly like this. This is related. So the market goes down, you have a recession, oil goes up, Russia invades someone. It's take a look on the statistics, Afghanistan, now Ukraine, etc. So these are the points that are going to be part of the decisions that AI is going to make for investments as well. Sorry.
No issue. So I got few questions from our, the viewers. So one question is that, which you already talked, but anyone can answer this particular questions if anyone wants to. So what role does sentiment analysis play in AI trading? This is one of the viewers' questions. So anyone of you want to take these questions and move forward? That what role does sentiment analysis play in AI trading? Is there any role of sentiment analysis? That's the question.
I mean, I could definitely talk about sentiment analysis. And one example that I can give you is back in the days where panics happened in the history in finance. The 1819 was the first panic, where a collapse of several markets, cotton, railroad, brought a widespread bank failure. Because people panic, people in an era where there was absolutely no technology to connect, right? So now in this digital age, when we look at the financial industry and how people feel about investing, we have to leverage this technology, right? We can monitor social media platforms in real time, detecting those early signs. And I think when we look at what happened with Silicon Valley Bank, with just one tweet, it just triggered the panic of people having to go to the to the banks, and we are at a time where we can control this, and we can integrate these tools to use sentiment analysis to really understand in real time how people are feeling about the market, scrape social medias. Again, AI is not just a tool, it's a force that we can use and leverage. But sentiment analysis is big. I can talk about that all day. And even that's just, looking at positive, negative, and neutral. We can go take it deeper into the emotion part of it. But it definitely, people in the industry should be focusing on sentiment and emotion in the part of investing.
So
Great
it means
question.
like so answer to the question is there's a huge role. If we anyway can take the sentiment of the people from different social medias or other medias, right? On that particular investment industry. Another few questions there, but I will take you one more questions. So if anyone wants to answer that. So how do robo-advisor utilizing in AI? So that's one question, mostly in investment. So robo-advisors, if anyone want to take these questions.
I can take it. In fact, if you go on our website, seethenextmove.com, you will see a few of use cases of robo-advisors. One of them, we call it exec bot. It's more of a finance bot, right? So it's essentially gives you a range of advice on obviously limited in the demo version, right? On anything touching sustainable business and finance. But specifically, just to answer this question very specifically, if you think about how a robo-advisor is constructed, particularly to overcome one of the challenges that I think Carla mentioned, the challenge of hallucination, which is a big one. So there are essentially layers, right, in what makes a robo-advisor. So you got usually a core large language model. If you think about that's the basic brain. So think about ChatGPT 4.0 could be like a first layer, right?
Mm-hmm. Yeah.
So then there is the training that bot for that specific functionality, which in this case would probably use a combination of retrieval augmented generation, training the robot on the features, if you will, that are going to underpin the advice given, right? So think about it. So if it is about a robot advisor that is going to help you with trading, that robot will have to be specifically trained and augmented, maybe around the indicators, many of the trading indicators that are being used, right? Specific aspect of policy, obviously with full auditability that is needed to underpin, right, the usage of the bot. Now, there are very few and far between these use cases they're usually in bank what's interesting when you look at this particular set of use cases is that the technology has moved enormously in the last 12 months, right? So 12 months ago, when you thought of an advisor, building an advisor, you probably would have thought, all right, like let's just look at it from the get-go of developing the core model and then all the interfaces and so on. Fast forward to today, there are essentially even no-code tools, right? Mm-hmm. Which can be used, to some degree, right? Depending on the sensitivity of the use case, that can then be combined with, the faster work, like the work of retrieval augmented generation, for example. Yeah. Does that answer your question, or do you want me to
it's understandable. Like,
very happy to explore this with whoever's asked the question, and you can connect with me afterwards.
Absolutely.
And I think now, because of the consumer being so aware of this technology, I believe robo-advisors have a great future. Betterment Wealthfront have done a really great job. I believe Betterment even incorporates tax-efficient investing.
Yeah.
And if we focus on building more effective algorithms, I think these portfolios can actually start understanding better the client behind, because at the end of the day, they're robo-advisors. But I think there's a great future for robo-advisors. although there's been a lot of challenges with them.
Yeah, absolutely.
Yeah, and I think, Carla, I think you made a really important point earlier. I think you were getting to the differentiation between a robot advisor that would be used to face a customer versus one that would be used to support maybe a human advisor, right? So
Yeah.
as it stands, because precisely of the sensitivity that Carla is alluding to, the level of risk to the use case will dictate whether you would consider a robo-advisor as being almost like customer-facing versus just a support to the maybe the financial advisor, right? And I think we're seeing more of the latter in at the moment because of precisely the many challenges, frankly, to develop enterprise-grade bots.
Yeah, so I sold robo-advisor services, self-directed services for so many years. And in my PlanKeeper.ai, my Grace, which is my conversational AI, she's going to be able to integrate and actually partner with the consumers so that it can augment the robo-advisors. And you know, we're using a lot of different technology and it's going to take a really big, I'm looking forward to being able to do that. It's to use a consumer partner to integrate and help people understand better those advisors, add guardrails to existing by leveraging and understanding market sentiment and a lot of things, but sorry.
Absolutely. So thanks everyone for joining. We have almost crossed our time. So it's really a pleasure to have you all. We will be connecting in LinkedIn and share more thought about it. And thanks for exciting views you have given to our viewers and in the team. And we got more and more examples and we'll be stay connected. So get more insight on it. Thanks a lot for your time. Bye.
Thank you.